Sensex and Nifty end in the green after a range-bound session. The October FNO series draws to a close with 6% gains for both indices as the bulls regain lost ground. Credit Suisse shares nosedive after the embattled Swiss lender posts a $4 billion loss in the third quarter, also announces an overhaul and promises to cut its cost base by 15%. Facebook's parent company Meta loses $67 billion in market capitalization after missing estimates in the third quarter. Mark Zuckerberg defends the metaverse project, which led to a 20% rise in costs. Elon Musk enters the Twitter headquarters carrying a sink as the $44 billion acquisition nears closure. Musk needs to seal the deal by tomorrow to avoid facing a trial. A new performance-linked incentive scheme for vaccine raw materials is on the cards. Sources say Centre could soon allocate up to 6,000 crores of incentives to encourage production of vaccine raw materials in India. Incentives up to 40,000 crores could be announced for 8 new sectors. That's an exclusive. 13 months since cabinet approval, government is yet to decide on converting VodafoneIdea's dues to equity. All approvals are in place and sources say a final decision from the Department of Telecommunications is still awaited. India's women cricketers will be paid the same match fee as their male counterparts, says the BCCI. Women will now get 15 lakh rupees for every test match compared to 4 lakh rupees earlier, but no changes to the annual retainers where men get paid more than women. Let's start with the day's market action. Dalal Street records biggest gain in the last 3 series while closing a volatile trading day with minor gains. Sensex rose up over 200 points. Nifty gained over 80 points. Bank and mid-caps also ended in green. The October FNO series has also drawn to a close. Sensex and the Nifty have gained 6% each as bulls regained some lost ground. Nifty is now 2% away from record highs. The big international story now. Embattled Swiss lender Credit Suisse reported a worse-than-expected quarterly loss of $4 billion. Consolidated revenue came at $3.8 billion, a decline of 30% compared to the same period last year. Under pressure from investors, the lender unveiled a major overhaul of business, including cost cuts, reducing risk and revival of investment bank First Boston. The bank's new CEO hopes the plan is the start of a transformation into a new Credit Suisse. Geoff Cutmore has the details.
We're going to see this significant cash-raising exercise, 4 billion Swiss francs. That's pretty much $4 billion these days. That will be raised both in a rights issue with existing shareholders and then, as you point out, there is this qualified investor, the Saudi National Bank, that they hope will pony up 1.5 billion Swiss francs, but it has to go to an EGM, a meeting of shareholders for approval on November the 23rd. So we'll see how that plays. Elsewhere, significant cost reductions. They want to shave 15% off the cost base. Initially, that will mean cuts of about 2.5 billion Swiss francs and a major restructuring of the investment bank. The Apollo Group will pick up the securitized products business, and ultimately they reprise the First Boston name. Credit Suisse First Boston, or CS First Boston, will become a new standalone business, and they're hoping to attract third-party funding for that. M&A advisory and your usual investment banking products will be inside that unit. So let's just have a listen in to what Ulrich Körner, the CEO of the business, had to say about this restructuring of the operation in the US.
Credit Suisse First Boston, as we will put it to the market, i.e. the capital market and advisory business, is in itself a very attractive, relatively capital-light business. I think, by putting that together in a separate entity, opening that up, for third-party capital as well, positioning it like with these very strong brand and titles of Credit Suisse First Boston is a very, very attractive thing, not only for our clients, but also in particular for our people and talent going forward.
And more global earnings. Tech giant Meta reported lower than expected numbers this quarter, missing street estimates on almost all fronts. The company's revenue came in at just under $28 billion, slightly below street expectations and down 4% year-on-year. This is the second straight time Meta reported a dip in its revenues, and the company's forecast for the next quarter shows another drop. This did not sit well with Wall Street investors. The company's shares plunged nearly 20% in yesterday's trade, wiping out almost $67 billion of the company's market share. Samsung Electronics reported a 31% decline in profit in the third quarter on the back of a big slump in demand for smartphones and semiconductors. The company's chip business, which is responsible for a majority of its revenue, saw a 50% drop in profit. Samsung, however, said that they would not reduce chip production. The company says they expect demand to recover in late 2023. Elon Musk treated Twitter users with visuals of himself entering the Twitter headquarters in San Francisco holding a sink. He also changed his profile bio to Chief Twit, indicating he's the new boss. This happened a day ahead of a court-ordered deadline to close his $44 billion deal for the microblogging site by 28th October. Remember, Musk recently asked his co-investors to prepare for financing the takeover. Twitter's shares will be suspended from trading on Friday. 13 months since cabinet approval, government is yet to decide on converting VodafoneIdea's dues to equity. Ashmit Kumar joins us now. Ashmit, what really is the status?
Well, that's the question that we have been, in fact, asking the government officials for a fair bit now. But as you pointed out, it's been 13 months since the cabinet granted the nod, but the clock is still not moved forward here. Keep in mind that in September of 2021 is when the cabinet, amongst a whole host of telecom relief measures, had also allowed for these telecom government dues to be converted into government equity. Since then, in January, Vodafone had applied, but the wait continues. What's important at this stage to understand is that all necessary approvals have been secured. So whether it's SEBI, looking in compliance with the takeover regulations, SEBI has granted its nod. The Finance Ministry has given its approval. So the file, as we understand, the application as we understand, is currently resting before the DOT, pending consideration. DOT is finalizing a call. Having said that, there are a few aspects to keep in mind. Number one, outstanding dues of Vodafone are piling up. Whether that's tower companies, whether that's vendors, that is a big sore point as far as VodafoneIdea is concerned. Also keep in mind that VodafoneIdea had sought to issue the shares at a par price of 10 rupees per share. However, it's been trading below that price since the month of April. So that has also been another point of concern. And of course, let's not forget, in terms of investors and in terms of money being brought in by the promoters, that's another core concern that perhaps has been doing the rounds. But so far, no clarity coming in from the government on what a roadmap will look like for converting these dues. It's been 13 months since then. No clarity on the way forward.
All right. Thank you very much, Ashmit Kumar, for keeping track of that big story for us. Let's now move on. The pandemic just accelerated the need for Internet of Things technology. That's the word coming from Matt Johnson, President CEO of Silicon Labs. In a chat with CNBC-TV18's Ashmit Kumar, Johnson also elaborated on the company's plans for India. Listen in.
In addition to being able to scale our research and development in the region, one opportunity that I mentioned is metering. So an example would be smart metering for water, gas, electric, you name it. And there's an increasing need for that wireless connectivity that can be valuable on the consumer side and also valuable on the infrastructure and deployment side. So we've seen globally in other regions where these metering deployments increasingly require that wireless connectivity. And we see that same potential and opportunity in India. So in addition to scaling research and development in the space, our intent is to continue increasing our focus on rollouts of IoT technology in the region as well.
Interesting. Let's change focus a little bit here. US President Joe Biden, speaking recently, said that he believes that the pandemic is over. So we're just coming out of the pandemic. It, of course, held a number of interesting lessons as far as the journey ahead is concerned. Just your perspective on what the post-pandemic world looks like and what are the key takeaways in terms of the roadmap going forward for IoT, courtesy lessons from the pandemic.
Sure. I think as it relates to the pandemic and IoT specifically, the pandemic absolutely accelerated IoT deployments. Easy examples would be the increased need for digitization at the edge, where people wanted, from a consumer perspective, more devices that are connected to improve their time at home when they couldn't get out. But other examples would be maybe think of healthcare, medicine, telemedicine, where more people required virtual visits, and the need for connected devices, whether it's a thermometer, pulse oximeter, blood pressure cuff that was wirelessly connected to the device that could transmit back during that telehealth visit. All these different applications have been exploding, and there's no expectation that telehealth will go away. The expectation is they'll continue. So I think, if you step back, the pandemic didn't change the ultimate course or trajectory, but it definitely accelerated the adoption of some IoT technologies. And, we expect that to continue.
And news just coming in. The Monetary Policy Committee will hold an additional meeting on the 3rd of November. Inflation has stayed above the committee's target range, 6% for 9 months in a row now. And now the MPC will have to draft a letter to the government explaining why it has not been able to control inflation. This meeting could be related to that. There is another meeting of the MPC in the first week of December. So we'll keep track of that for you, and we'll get you more news on that in a few hours from now. But for the moment, we're going to take a short break. Don't go anywhere. We get you an exclusive interview with Maruti Suzuki Shashank Srivastava, which has seen strong festive growth in the last 1 month. Don't go anywhere. That interview with Shashank Srivastava coming up in just a bit. Welcome back to Newscentre. The festive season has turned out to be a mixed bag for the Indian automotive sector. Sources in the industry tell us that passenger cars reported a solid 40% growth over last year. However, sales have been still below pre-COVID levels for some companies due to production-related challenges. It has, however, been a bumper ride for Maruti Suzuki, India's largest passenger car maker. Sources tell us that Maruti saw a 45% year-on-year increase during this festive season. They retailed around 1.9 lakh cars in the last 1 month and are presently sitting on a strong order book as well. I'm now joined by Shashank Srivastava, Senior Executive Officer of Maruti Suzuki. Mr. Srivastava, thank you very much for joining us. According to estimates, the industry retailed approximately 400,000 cars since the 26th of September, the first day of Navratri, to Bhai Dooj. What would be your estimate? Are the numbers higher?
Yeah, so I think it's a fairly good estimate. The festive season started with the first Navratra on 26th of September. And officially, it closes with the Bhai Dooj, which was yesterday. So in this period, estimates are 400,000 sale for the industry. Maruti Suzuki, as you rightly pointed out, 1.92 lakhs. So that's an increase over last year. Last year, the sale deliveries for Maruti was about 1.36 or 1.37 lakhs. So that's more than a 40% growth. So that's a good growth to look back. But as you also rightly pointed out, less than what we saw in the pre-COVID period in the same festive period.
Right. We have also been hearing from the industry that the demand for entry-level segments continues to be under stress for two-wheelers and the passenger car segment as well. Would that be right for Maruti Suzuki?
If you look at the entry-level segment, it has, as a percentage of the overall sales in the industry, come down. In fact, that has been the trend the last couple of years. So in that sense, it's correct. But if you look at the absolute volumes is still quite large, still around 35-36% of the overall industry. So that's if the industry is expected to touch around 3.8 million this year. So almost 35% of that would be small cars. So in that sense, it's a very large volumes, and Maruti Suzuki obviously has a very large market share in excess of 70% actually in that segment. So in terms of overall absolute volumes, it is still extremely large segment for us.
Right. Do you expect this demand momentum to continue, Mr. Srivastava? What is the overall order book right now?
So for Maruti Suzuki, it's around 440,000, and the estimate in the industry is roughly 8.25 lakhs. So out of which 4.4 lakh is Maruti Suzuki. It's a fairly healthy pipeline of bookings. But remember, the industry has struggled to have production in line with this demand pattern. And that is one of the reasons why I thought that the retails could have been higher during the festive season. So on one side, there was a tailwind because of the better availability of semiconductor and hence larger production, which enabled these large numbers in the last few months, including the festive season. On the other hand, there has been a constraint as well still of around 5% for some of the models, for which explains why you see such a large number of pending bookings. Now, going forward, when you say what is the trend going to be, I think we have to watch out for it's sort of a mixed signals that we are getting. So we have to watch out for a large number of macroeconomic factors, including the GDP growth, which is very closely related. The auto industry growth is very closely related to that, as also the interest rates, which after some lag would start building up in the retail finance rates, which so far hasn't happened, even though the repo rates have increased. So I think we have to watch some situations like that, and also see when the increased production happens, what was the fundamental nature of the bookings that are reflected, which are admittedly quite large.
Right. So on the whole, would you say that this festive season has met expectations, or was it below expectations for Maruti Suzuki, considering this is being considered as a record production year, record sales volume year for passenger cars?
Yeah, so I think roughly it was in line with expectation. However, considering that in the same period of time, we have seen the pre-COVID years, 206 to 210,000 deliveries against 1.92 that you saw this year. I would say partly because of the production constraint, these numbers could have been and should have been higher.
Right. To what extent were you constrained with production, Mr. Srivastava, if I were to ask?
Yeah, so that's reflected in the pending bookings that we have, and that pending bookings have built up largely because of the constraints in production over the last few months. And that's one of the reasons why I'm saying that going forward, once the production normalizes and we are able to supply vehicles in large quantities in the models where currently there is waiting, we will get to know the exact situation. And we are very closely monitoring the fresh inflow of bookings, which is a much better indicator than the pending bookings, which is suggesting probably giving a slightly misleading picture.
Right. Mr. Srivastava, do you expect the chip situation to perhaps worsen because of recent US export restrictions on semiconductors and semiconductor products to China? Do you feel that the pipeline of semiconductors could be affected once again?
I don't think so, although we are still making that assessment. But it's only got better over the months, the last few months, and we are just around that 95% mark as far as our planned production is concerned. So for the balance, we are not able to give any clear date when it will become 100% normal because the visibility of the semiconductor component availability is not there for the long term. So we keep getting an updates every week, and that's how we keep varying our projections.
Right. We have seen some strong demand for cars like the XUV 700, the Creta. We've also been hearing of strong demand for cars like the Alto, Wagoner, Baleno, which according to you were the strongest, were the hot sellers for Maruti Suzuki during this festive period. And what about the new product from the Maruti stable, the Vitara?
Yes, so actually not just for Maruti Suzuki, but for the industry. Just to give you a perspective, the top selling vehicle for September was the Alto with 25,000. Second was Wagoner with just above 20,000. Third was Baleno with just under 20,000. And then the Brezza with just above 15,000 numbers. So this is actually the industry number, not just Maruti Suzuki. It just happens that the top 4 models in the industry were from Maruti Suzuki. And during the festive season, the top selling vehicles were Wagoner, Baleno, Swift, and the Brezza. So they have given some extremely good numbers, and that reflects a continuing trend that we saw in September numbers as well.
Right. If I were to ask you about rural versus urban sentiment during this festive season, what was the trend that you really saw?
It was fairly secular in terms of the geographical divide. However, there were pockets, especially in rural areas, in some of the states where the rainfall has been a little scanty. So while on the overall level, the monsoon seems to have been good. However, if you look at the statewise numbers, statewise figures, in some certain areas, there is expected to be a shortfall in both the Kharif output as well as the Rabi sowing. So we saw a mix, but really, if you look at the macro level of urban versus rural, it's a fairly secular result that we see.
Right, and finally, what are you seeing a lot of cancellations when it comes to the entry-level buyer? What about CNG cars? Have they been under stress also for the past few weeks?
For the past few weeks, we have seen a fairly stable inflow for CNG, a little less than the peak that we saw in Q1, but still above the last year's number. And of course, partly also explained by the fact that we have also introduced some new models with CNG, the Swift being the case, which we did in the first week of August. So we haven't seen any unusual cancellation either on the whole or specifically in the CNG. And I also forgot to mention the last question for the Vitara, where we have seen some extremely good response with 75,000 bookings being crossed. And fairly, the sales seem to be pretty good in October as well. We started the sales in September, as you know.
Okay, how many have been delivered so far?
So around the 10,000 numbers.
Of the Vitara?
Yes. So 4,700 or 800 was the number, if I remember correctly, last month. And the trend continues to be strong.
Okay, 75,000 bookings for the Vitara, 10,000 delivered so far. Thanks very much for joining us, Mr. Shashank Srivastava. With that, it's a wrap on this edition of Newscentre. News continues on CNBC-TV18. Stay tuned.